For markets news now, Asian stocks fell while European markets were higher after France's elections left its legislature divided among the left, centre and far right, with no single political faction getting close to a majority. Hong Kong's Hang Seng Index declined 1.6% and the Shanghai Composite Index dropped to 0.9%. In Tokyo, the Nikkei 225 index was down 0.3% despite official data showing the real wages fell 1.4% year on year in May, a decline for the 26th straight month as the weakening yen and the higher commodity costs pushed up the cost of imports. Wall Street stock indexes closed firmer with the tech-heavy Nasdaq and benchmark S&P 500 hitting record highs as mega-cap stocks rallied on data signaling U.S. labor market weakness and pulled Treasury yields lower. The S&P 500 gained 0.5% while the Nasdaq Composite rose 0.9%. The Dow Jones Industrial Average was 0.7 up to 39,375. Here at home, the JSE index was slightly down on Monday to trade below 80,500, extending Friday's losses, mainly pushed down by resource-linked sectors and financials. The rand is currently trading at around 18 rand 14 to the dollar, 23 rand 25 to the pound, and 19 rand 66 to the euro. Gold is trading at $2,377 and platinum at $1,012 per ounce. The price of Brent crude oil is at $86.18 a barrel. Our market commentator for today is Gary Boyson, who's a portfolio manager at Rand Swiss. Gary, hello, and welcome to SABC News. First, let's wrap up this past week with the U.S. labor market adding more jobs than expected, 206,000 in the non-payroll jobs in June. Now, take us through how that affects us here in South Africa.
Well, it's one of the key economic indicators globally, and it gives us an indication of what's happening in the US labor market. So it was kind of, they're calling it a Goldilocks number, because what we actually want to see in the US with all the interest rate hikes that we've seen, we want to see that actually strangling economic growth. So it's this weird situation where we want to see bad numbers coming out of the US economy. We've increased interest rates. Now they want to start to see their labor market deteriorate, so that will bring inflation under control. So it was, as I said, a Goldilocks number in that we got unemployment slightly ahead of expectations. So the market was expecting around a 4% unemployment figure. We got 4.1%, so a little bit weaker than we expected, which is actually a good thing because it leads into more interest rate cuts or sooner interest rate cuts that will be delivered sooner. But at the same time, we saw the actual number ticking up so there were 206,000 new jobs added. The expectation was only for 190,000 jobs to be added. So kind of like in between, they did revise down the May figures lower. So it is showing that there are cracks forming in the US labor market, and that means that we could potentially see interest rate cuts from the US. Now, looking at the market pricing, there's about a 75% chance that we're going to get a cut from the Fed on the 18th of September. So there's all ways that you can calculate that. What does that mean for South Africans? Generally, that means that the Reserve Bank is going to follow what the US Fed does. So once we start seeing cuts coming through from the US, there's a good chance that we'll start to see a similar move from the South African Reserve Bank. And that means, less payments for bonds, it means less payments on credit cards, and it means cheaper ways that you can finance projects. So your weighted average cost of capital is lower. That means businesses will make more investments. It means more jobs. So good for everyone. Yeah.
Now let's come back closer to home. More than 100 days of no load shedding, but still warnings when we look at the letter from the president this morning that we are not completely out of the woods yet. But I can imagine that this is very good news both for households and businesses and the economy as a whole.
Absolutely, and we can see that in the improving business confidence figures. So in the first quarter, business confidence was at extremely low levels at around 30. The index in the second quarter ticked up to around 35, so coming off those lows. And I expect that to get a lot better. As you say, very good for firms, and what's good for firms is good for households, because firms pay households and households buy the products that firms make. So yes, very good news. Seeing it in the business confidence, also the outlook from Eskom looking a lot better, and it really does does affect absolutely every sector in the economy. There's estimates that in 2023 load shedding cost us around 2 percentage points of GDP growth. This year those forecasts are around 0.5% and actually trails off into 2025 and 2026. So, we are seeing a much better prediction going forward. Part of this is because obviously Kusile has added Unit 5, which is gives another 800 megawatts to the grid. Modupi is also coming in, and this, as I said, good for every sector of the economy. People like ShopRite that were paying R1 billion for diesel and estimating that at their cost of load shedding, that obviously will fall away, and that will drop to the bottom line. So good for the business that can keep investing, and good for shareholders because they'll see a good return on their shares.
Crossing fingers that it continues, Gary. Key data this week from Status A, not very busy week in terms of data-wise, but we do have mining production figures as well as manufacturing production figures, and we saw that mining rebounded 0.7%, while manufacturing production also rose by 5.3%. Can we expect these numbers to continue and sustain in this improvement?
No, it's a great question. And these are very, very volatile numbers as well. You would expect that the low levels of load shedding are going to feed into both mining and manufacturing, specifically manufacturing production. If you can imagine, what happens on the underlying factory floors when they have to shut down for large periods of the day, you would expect that to feed into the number, but it is a very volatile number historically. So yes, I think there's very limited estimates on where the manufacturing figures are going to come in. Not a lot of people cover what it is actually going to be, but we want to see the manufacturing get better, and I think you could see it given the overall context. And it's not just that load shedding has reduced; it's also, I think, with the GNU coming in, you're definitely getting the sense on the ground that people are more optimistic, firms are more optimistic about the future, and that leads to further investment. It leads to spending within the firms. So there's hope to see a tick up in both the mining production and the manufacturing, and we can see a lot of the miners are doing exceptionally well on the market at the moment. So the likes of specifically the platinum miners have had an incredible week. So hopefully we see that reflected in the numbers on Thursday.
Gary, while I still have you here, I want to hear your thoughts about the elections in France and how they're panning out. Seeing that the party of Emmanuel Macron will possibly lose some seats. What does it tell us about the economy that side, and if there'll possibly be a contagion to us this side?
Well, it's an incredibly complex election result because Macron obviously called these snap elections with the hope of pitting the left against the right, and everyone was expecting Marine Le Pen's party to do incredibly well on the right, and yet the left-wing alliance actually has won the most seats in their parliament. So the result is that we're going to have a hung parliament, and that's very, very unfortunate because we do need to see some fiscal consolidation there. So I think what you're probably going to see, just as the French face a deadlock in their political system, probably French bonds under a little bit of pressure. You're probably going to see a little bit of a weakening euro as well, which, yes, as a trading partner is not good for us, but maybe it'll make holidays to France a little bit cheaper if we can see the euro weakening a little bit. Right.
Gary, always great speaking to you. Thank you so much for your time. I've been speaking to Gary Boyson, who is the portfolio manager at Rand Swiss, and he's been analyzing the markets for us.